What's good, everybody, and welcome back to the End Goal podcast. Today, I wanted to finally talk about something that has been pretty often requested on this podcast, specifically due to my background, and it's taxes. Because if you're new here, hi, my name is Arish. I run this podcast, but my 9 to 5 is doing taxes. I'm a CPA, and I'm a manager at a Big Four accounting firm. So I've had quite a bit of experience doing taxes. I do taxes for millionaires and billionaires, essentially. And what I've learned over the past year of bringing up tax things to my friends is, yeah, people don't fully understand taxes to the extent that they think they do, that I think they do, that I think is more common knowledge than it actually is. Um, and there's a lot of missed opportunities that I've noticed in people like me who are W-2 wage earners, not the people who are rich, own businesses, and are in a higher income tax bracket. To be honest with you, this mini series that I want to make this year on taxes is for not the ultra wealthy, rich, etc. It's for people who work a 9 to 5, who have a day job, who have a W-2, and maybe they're trying to figure out, like, what do I do in terms of my taxes, or how do I at least understand my taxes? To be honest with you, I want to help people understand taxes first before we even talk about tax planning, tax savings, things like that, right? That's my goal with this. As always, I'm going to say it right now. If you have any questions about taxes, feel free to leave it in the comments or DM me personally, and I'll talk about it on one of these episodes. I want to help you understand taxes before we even think about manipulating them to your benefit, right? And I do want to say, when I talk about manipulating taxes, I obviously mean legally. There are tax planning strategies that you can do to reduce your tax burden overall. Um, and it's something that I think people are afraid to do because you think like one small step, one small mistake, and the IRS is banging down your door with like an IRS agent with a gun is banging down your door, and we already have enough of people with guns on the streets right now. We don't need money folk there, okay? So I get that taxes can be scary. Taxes can be confusing. That's the first thing that I want to talk about, right? Is taxes are taxes are meant to be confusing because at the end of the day, the government wants your tax money. They do. They are very incentivized to write the tax code in a way that is very confusing to the normal person who reads it. There's a lot of like if thens, there's a lot of but rathers, there's a lot of like inclusive except for and things like that. So it's made confusing on purpose, right? You have to pay somebody like me to decipher it. Not me. You have to pay somebody who's who's much smarter than me to decipher it, and then um, tell you here's what the code says, and here's what we can do within the boundaries of the code. Most times, for people like us who just work and get a W-2 at the end of the year, that taxes are already withheld, and we don't really have any investments outside of it. We just do our work. That's all we. There's nothing for us to do, right? I think that's the next thing I want to talk about is like taxes. A lot of the times when it comes to tax planning strategies, are made for people who have complicated tax structures, right? For somebody who just has one tax form at the end of the year, there's nothing for you to do. You just file that tax form and you owe taxes. If you owe taxes, usually you shouldn't, but you owe taxes, and I'll get to why you shouldn't, either at the end of this uh, episode or on a different podcast episode. But taxes are made for people who have complex tax structures that are made in a way to get around certain tax provisions, tax code regulations, and then new code regulations come out to try and limit those people trying to get around, getting people to pay their taxes, right? The biggest thing that you've heard in the past is why like so many rich people don't pay taxes. That is not 100% true. I would like to admit there are ways to mitigate the amount of taxes that you pay that rich people have. The wealthy people and much more informed people have the ability to like structure their taxes in a way to where they don't end up paying that much throughout the year and then in April. But for the most part, wealthy people also pay their taxes. They do. I'm just going to tell you right now, they do. I see them. I send people $1 million tax payments that they have to make, and they make them. They don't say, "Oh, I don't want to pay this," and they don't. Right? They do. I do understand the cases where people say they don't. I understand those. We can talk about those later, but I understand those. So that's the big thing, right? Is the first few things I want to explain is that taxes are confusing. Tax planning is not for you at this stage in your career, most likely. It is not a how do I reduce my taxes? It is much more how can I understand what my taxes are telling me, what my tax return is telling me. How can I manage my spending, budget my spending, save more money, make more money, and things like that before you even get into the realm of taxes, right? So that's the next thing is um, if all you have is a W-2 and you still somehow owe at the end of the year, I would take a look at that and see, okay, was there enough taxes withheld on my like on my monthly, bi-weekly paycheck? You know, where did I have enough withholding? If you didn't, you file that form with your employer and withhold a little bit more tax for your up in relation to your upcoming current salary, and then you withhold more at the end of the year. You don't have to pay taxes. Maybe you get a refund because you withheld a bit too much. Who knows? That's always nice, right? But I think it's always nice to not nice. I think it's always important to take a look and see at the end of the year, why are you owing taxes? Because ideally, your employer is withholding enough taxes from your gross income that they pay you so that at the end of the year, you're not paying additional tax on those wages in April when you file your tax return. That's how ideally it should go. Because most of the time, what I see is people are taxed on their non-wage income, right? Non-wage income is income that you received not in the normal working hours. I'm going to rephrase that. Non-wage income is income that you have not necessarily worked for in your 9 to 5 day job. It does not come on your W-2. That is the income that is non-wage income that causes additional taxes. Non-wage income is like investment income, interest, dividends, capital gains. Non-wage income can also be things like business income. If you run a single member LLC, if you have an investment partnership, if you are a shareholder of a corporation and corporations issue dividends, partnerships issue a K1. If you have um, a trust that distributes income to you as a beneficiary, you need to pay taxes on that distributed income. If the trust doesn't, usually the trust won't like take that into account when it issues you your distributions in K1. What else am I missing in terms of non-wage income? It could be like any incidental income, like gig work, right? If you're a contractor, and so all of your income is through gigs and not a normal wage setup, you get a 1099 from the companies that you worked for. That's non-wage income. That's income. That's self-employment income that you have to then pay taxes on. That's where that's where a lot of people you talk about like, well, I get because I don't have a job and I don't get a W-2. All the money that I make through my gig work, I put away 1/3 of it. So that when the tax time comes around, that 1/3 is what I use to pay taxes if I owe for the taxes that I owe, right? Um, so that's non-wage income. But what I'm saying is like if you don't have non-wage income, you just work a job and you get a W-2, you shouldn't be owing. If you do, you should take a look at your tax return. Like, why do I, what is it? What is the difference between how much I have to pay versus how much I should have paid? Right? Was enough withheld on my tax return? Do I have penalties? Usually, listen, people in our tax bracket, as you and me together, our tax bracket, the low ones, we shouldn't have payment penalties. That's for the rich folk. That's for the people who pay estimated payments every quarter throughout the year, so that on April 15th they don't have an estimated tax penalty because they didn't pay throughout the year. We don't have to do that because the taxes are being pulled out periodically through our tax return or through our W-2 and through your employer, the FICA taxes on your paycheck. For people with gig work, if you're under a specific threshold, doesn't really affect you, to be honest with you. Um, it really just occurs when you get over a specific income threshold where you have to start paying estimated income taxes. But before I want to take a step back. I'm being a bit technical. I want to take a step back. Go back to what we were talking about: tax planning versus um, just money planning and budget planning and stuff like that. Right? I would be very wary of every time there's a change to the tax code regulations and you see get a lot of people online talking about like you could be saving more money, you're leaving money on the table, you're paying way too much money to the government, you need to know about this new tax thing. No, you don't. For the most part, you probably don't. It does not affect your life in any single way, form, or fashion. That is simply taking up way too much of your attention and time. It does not matter. This new SALT, state and local tax increase of 40K, will almost never affect you. It is for a niche set of income, high, like mid to high income earners, where they get above the 10K benefit that was already there and below the 40K cap. And if you're too high of an income, you get phased out. You don't get the 40K anyways. You're back down to the 10. So it does not matter. Like, and if it did, your accountant would be the one telling you about it. If you're hearing about it from somebody online and not your own accountant, if you even have an accountant, if you don't have an accountant, these things don't matter to you in the first place. If you're filing your taxes through H&R Block, through TurboTax, through the VITA program, which I used to volunteer in that back in college. If you're doing your taxes in that way, this stuff doesn't apply to you. It really doesn't, right? So I would be very wary of where your attention is when it comes to taxes, right? Where your time is better spent is budgeting, is looking at your expenses, looking at your income, looking at where you're spending all of your time. Is there time that you're spending now that you should not be spending the way that it is, that you can trade for more money? Or is there time that you can trade for time you can trade to learn more skills that then will help you bring in more money? And as you increase your wealth, your money and things like that, then you start thinking about, okay, I have more income coming in than I have previously. I have some disposable income. What do I do with that disposable income? Do I spend it on a Bugatti? Or do I put it into an investment? All these different things, right? Um, that's where I would spend my time. And that's where I do spend my time. I don't spend a lot of my time currently on tax planning. I have recently because I have um, some more things going on now, but previously that's where I spent my time. I didn't care about my taxes, to be completely honest with you, because I knew that I only have a W-2. I actually have 1099s, but that's about like from my brokerage accounts, and I'll get to that in a second. But that's all I had. Like, there's no tax planning for me to do in that situation because I have nothing else, right? Um, so I would spend time not on tax planning. I would spend time on your own like personal budget and life planning first until you get to like the 100, 150K mark to where you have income, disposable income, hopefully, depending on what your lifestyle is like, to then put into other places, whether it's you're investing in businesses or you're investing in S&P or index funds, or you're doing your own investing, whether it's day trading or things like that, or long-term investing, or you're using that money to like donate to charities and things like that. Maybe you bought a house and you have a mortgage payment. If you have loans to pay off and you have the interest expense on those, if you um, want to start a business, you get to think about like the tax structure of owning a business, whether you're going into a partnership with somebody else or doing it yourself. That's when all these things come together, but they don't really like manifest into I need to tax plan until you have like a bit of a higher income threshold. So honestly, for anybody under 100K right now, if you're taxed, if all you have is W2, if all you get at the end of the year is a W2 and maybe like one or two 1099s because you have income to invest, tax planning, no. Like, plan your life. Go budget, go live your life, that kind of stuff. You don't need to tax plan. You really don't. And if you really wanted to, then yeah, sure, you could analyze your taxes under a microscope and go talk to an accountant and things like that. You don't have to do it yourself. But I would probably go to an actual firm and talk to somebody in person and not just watch videos online from people telling you about taxes, except for this video. So that's a bit of an overview on my stance on um, tax planning as it is, right? I've been doing taxes for 6 years, going to probably be doing it for some more. I understand stuff to a degree that I don't even want to. But the reason that I found for myself to continue in my line of work was not to continue the job that I'm doing, which is taxes for millionaires and billionaires and helping them save and making sure that they don't get in trouble with the IRS and other like departments and things like that. The reason that I found for myself to continue what I'm doing is because I saw how much it helped those around me, right? The questions that I can answer for my friends and family is why I continue to do taxes. It's the it's I realized that I could actually distill the information that I know to somebody else and help them, even though like the specific my day to day, what I do at my job is not the same, like what the same type of help that I'm giving them, but it's informational. It's very much just like clearing things up, answering questions, trying to um, reduce misinterpretations of the tax code or things like that, right? That's where I found that I could help people. And that's kind of why I continue to do what I do. I was trying to not bring it to the podcast, to be completely honest with you guys, just because, I was still at a stage in my career where I didn't trust myself as a tax professional. Not that, it's not that I didn't trust myself. I didn't know, I didn't think I knew enough. But what I noticed was every 2 years of of being at this job, it's like for 2 years you do something, you accumulate all this experience, knowledge, and information, and then like at the 2 year mark, when I the like half a year into being a senior associate, um, a lot of it just like boom, like ingrained itself in my brain. I was like, wait a minute, where did all this information just randomly come from that I can pull out at the drop of a hat now? I didn't have this like in the past 2 years when I was an associate, right? And then about 2.5, 3 years of being a senior associate, and then I hit manager, and I'm like, whoa, where's all this information coming from that I thought I didn't know as a senior associate, but now it's like finally sunk in and things like that, right? So, for me, it was just about giving it time, giving it like allowing myself to really let the information and the experience sink in before I felt comfortable enough to like talk to people about it, right? Taxes aren't very hard. I say that as somebody who understands it, and I get that. I get the same commentary from one of my friends who does like option trading. He's like, it's not that hard. I'm like, that's just I can't do that, right? So I get that to somebody else. Taxes are very confusing, and for me, taxes aren't that hard. I get that. Um, but the whole reason why I'm talking about it now is because I think because there's so much, so much like misinformation out there, sometimes disinformation, but most of the time misinformation out there. I just want to do my part to help clear things up and just kind of counteract the misinformation. Like you're probably not gonna hear me yelling about the newest tax code immediately online because one, I probably don't understand it as deeply as I think I do, and two, I understand that the people who I'd be telling, who the people who watch this, who are middle class people, it's really not going to affect The people who it does affect are my clients who I've already talked to, things like that, right? So I want to do my part in helping you understand the tax. I want to do my part in helping you understand taxes, what the language and the vocabulary means, and then once we have gone through the understanding process, I'll break it down for you and tell you what you can do about your taxes. I promise you that. I promise you I'll do that for you. But only after I've felt comfortable, like I felt comfortable that I've explained to you how taxes work, what taxes are, things like that. Cool? Capiche? Because then I want to get into the next thing I want to talk about, which is tax vocabulary, right? And these are very high level tax vocabulary things, but things that I feel like are important in order to understand taxes. And it makes the subsequent planning and explanation process easier if you already know what the words mean. So I don't have to explain to you what the words mean. We can just start talking about what to do, what to look for, how things work, etc. So let's talk about income. Okay. First tax vocabulary is gross income, adjusted gross income, and taxable income. So income is any money that you make. It is supposed to be any money that you make. You know what? Actually, IRC code for gross income. I kind of want to show you guys exactly what um the internal revenue code, which is IRC, the internal revenue code section, code section 61 for gross income defined, says except as otherwise provided in this subtitle, gross income means all income from whatever source derived, including but not limited to the following items: compensation for services, including fees, commissions, fringe benefits, or similar items; gross income derived from business; gains derived from dealings in property; interest, rents, royalty, dividends, annuities; income from life insurance and endowment contracts; pensions; income from discharge of indebtedness; distributive share of partnership gross income; income in respect of a decedent; and income from the interest in estate or trust. So income is literally any money that you get is income to you. That is gross. That is what gross income is. There are then subsections of gross income, right? There can be like investment income, there is wage income, there is non-taxable income, there is um, other types of income inside of that, but all the money that you make is gross income. You go to a deserted island looking for proof of the files, and you find like a treasure chest full of money. That's income. You go gamble and you make $5 on the $40 that you gambled. That $5 is gambling income. That's supposed to go on your tax return. I know people don't put it on there. I know they don't. The IRS knows they don't. But part of the code, all of that is income. So that is your gross income. So when you add up your wage income, your interest, your dividends, your capital gains, your other income items like rents, royalties, partnership income, um, things like that, you add all those up, you get what's called your adjusted gross income. And that is line 11A on your Form 1040 for 2025. That is line 11A. That is if you look at a 1040. Actually, should I pull up a 1040 for you guys? Yo, it might be time to pull up a 1040 for you guys. I'm thinking I might just do that. Let me see. Your adjusted gross income is essentially all of your income added up for the year. That is your adjusted gross income. Your taxable income is the actual final income number on which you multiply your tax rate. It is not always equivalent to your adjusted gross income. The thing to know here is your gross income is income from all sources. Your adjusted gross income is all of your gross income items added up, because you can have negative income items. Say you rented out your house for a year, and you had rent income from the rentees coming in every single month, but you also had expenses throughout the year. You had um, to replace the foundation, you had to fix the foundation, you had to fix the water heater, you had to um, fix the roofing, a pipe leak, you had to pay for a plumber. You have all these expenses, right? And so let's just assume that you had, let's say, 50K of rent income, but your expenses were 60K. you're 10K in the red. So your rental income for the year is actually a rental loss of 10,000. That 10,000 is gross rental loss, goes into your adjusted gross income calculation with your other income items. You take that 10K, you subtract it from the rest of your income, you have less adjusted gross income than you did your total, you know, than you did like your total gross income, whatever it is. So your AGI, your adjusted gross income, can be less than what you think like all of your gross income numbers combined, because you have losses included in that income number. We can talk about income and loss and things like that at a later time on like what causes them, when to take losses, all that stuff. I know there's a lot of language online from people who talk about like, take your deductions, take your losses, this is a write-off, all that stuff. We'll talk about that later. I have some very choice words for those type of people. Cool. So we're at AGI, we're at adjusted gross income, right? What I want to explain, and the reason why the tax code is very confusing, is whenever the government issues new tax regulations or amendments to the code or new code sections or whatever it is, taxes are based on like thresholds. You've heard of this, right? Income tax brackets. If your income is 0 to this number, you're at this percentage, this number to the next number, this percentage, that number to the number after it, this percentage, right? It's all about thresholds. Most deductions, most thresholds are factored off your AGI, right? The idea is that when you have itemized deductions, and we'll talk about that in a second, but when you have deductions, a lot of the time is you get this deduction, but between this AGI number and this AGI number, it's phased out, and then you get this. That's how the new SALT deduction works. Yeah, so the new state and local tax deduction, where you can take state and local taxes, where previously it was 10K, things like property tax and other state taxes you would have to pay, you can deduct those on your federal tax return. The previous cap was 10K. Like you could have paid like 50K of taxes. We can only deduct 10K on your Schedule A, on your itemized deduction report, and they raised it to 40K. And then that 40K phases out for people who have over 500K in modified adjusted gross income. And eventually it basically, from 500K to 600K, it phases out to then, if you're over 600K, you pay 10, your cap is at 10K again. Under 500K, the 40K cap is there, but it's for people who itemize. And if you don't itemize, it doesn't affect you. Once again, wage 2 workers, people who have wage income and 1099 income at the most, you take a standard deduction on your tax return. We'll talk about that, what deductions mean in a second. This doesn't affect you because you're not itemizing, right? It doesn't affect you at all. You could try really hard and it may not affect you because you don't have enough taxes to take that. And it just doesn't affect you. That's just how it works, right? So this was one of the big things that I saw people talking about a lot online, which is kind of why it's very fresh in my head and very annoying, because I keep seeing it. And I'm like, who are you talking to in the first place? Not me. Not my tax bracket brethren. It doesn't affect us, right? Let's go back to AGI. So AGI is what kind of determines a lot of these thresholds and phase outs and things like that. That's just really all you need to know for now. We're going to skip ahead. We're going to go to taxable income. Taxable income is your adjusted gross income minus your deductions gets you your taxable income. And the taxable income is what you multiply your tax rate off of. That's why taxes are confusing, guys. That's why taxes are confusing, because without visual aids, it's just annoying to talk about. It's annoying to talk about without visual aids. And so I just want to explain the fact that your taxable income is your adjusted gross income minus your deductions, and your taxable income is what determines what your tax due will be. It determines what your tax rate is, and it determines what your tax due is. So the idea is to reduce that taxable income number as much as possible. That's the goal of tax planning, is to reduce that taxable income number as much as possible. Sometimes you can get around by using credits and other types of payments to reduce the tax due number. Get to that much later. But the idea is to reduce your taxable income so that you don't have to pay as much taxes, right? That's the number that we're looking at. That's the number that we're looking at. And the way that we do that is either getting your AGI low or getting your deductions high. Deductions. What are deductions? Deductions are anything that you any deductions are anything that will reduce your AGI to get to your taxable income. Deductions are not a dollar for dollar reduction in the amount of tax that you pay. It's a credit. Deductions basically reduce the taxable income number, and then you still have to multiply that number by the tax rate to get your tax due. And so because there's that extra level of like multiplication there, any increase in deductions will not dollar for dollar reduce your tax due, right? But the idea is to reduce your deductions as much as possible. For you and for me, we take the standard deduction. The standard deduction is a deduction that the government has said is for like, on average, we're going to give you like this deduction for everybody because most people in this bracket or above this bracket, in this bracket, whatever it is, aren't going to have itemized deductions over this number. We'll just give you this standard number to deduct on your tax return, and it scales up every year based on something. I don't know what it's indexed to. I don't want to say it's inflation because inflation obviously isn't real based on the Fed, but sorry, not the Fed, president, but that's your standard deduction, right? Most people like us, you, me, we take the standard deduction on our tax return. On line 12E, you take the standard deduction for single people or people who are married but filing separately. It's $15,750 that you get deducted against your adjusted gross income to then bring you to your taxable income. For married people, it is roughly double that, $31,500. I think it is exactly double that, $31,500. If you are single but you manage a whole household, right? So if I'm single but I run this household and I have like a mother to take care of, I have 2 kids to take care of, but I don't have a wife or like any sort of spouse who I file with, I'm the head of this household, I get a slightly higher deduction of $23,625. I don't know why it's $23,625. Is that like half of 15,750 added back on? It could be half of 15,750 added back on. But that's the standard deduction, right? You, me, we take the standard deduction. That's how it works. Hey, Arch, what are itemized deductions? I keep hearing about itemized deductions all over the place. Every time I see a video on TikTok or Instagram or YouTube Shorts, or my accountant talks about it and I don't really understand it, what are itemized deductions? Well, itemized deductions are basically saying, I have spent money this year that I'm allowed to deduct against my taxes. I want to take each of those deduction items and add them all up and take a higher deduction. That is an itemized deduction. It is Schedule A of your tax return. And the only way the itemized deduction is in any way beneficial to you, the only way an itemized deduction is beneficial to you is if it is higher than the standard deduction. It is not the only way. There are some reasons why you wouldn't. For the most part, you wouldn't. The only reason to itemize is to take more of a deduction than the standard deduction offers you. Therefore, if I'm a single individual, if you are a single individual, and you can itemize your deductions to be higher than $15,750, if you get up to $16,000 in itemized deductions, take it. But if you're at $15,500 of itemized deductions, there's no reason to take it. There's just no reason. You get the extra $250 through the standard deduction, right? Double that for married people. 1.5 that for head of household. So if your number on line 17 of your Schedule A is higher than the standard deduction that you're able to take on your tax return, then you can take the itemized deduction. That means you and me, well, you have to get over $15,750 in order to itemize. I have to get over $31,500 in order to itemize. I'm not getting over there. I'm gonna be straight. I'm not getting over there. So I have no reason to worry about a Schedule A at this point. I just take the 31K standard deduction at this point, right? So we have gross income. We've talked about adjusted gross income. We've talked about deductions. We've talked about taxable income. We've talked about tax, which is your tax rate times your taxable income. That's your table tax. Let's talk about credits. Y'all have heard of credits in the past, right? Credits. Your child credit. If you have a child, you can deduct it as a credit on your tax return. There's other types of credits. The energy credit that they used to do to like push buying like electric cars or going solar or things like that, efficient energy credit, things something like that. Credits. Credits are a dollar for dollar reduction on your total tax. So credits are really cool because they do decrease the end number that you have to pay based on certain thresholds, but they reduce the end number that you have to pay. So the credits are cool. There's not that many credits out there, but credits are cool. You and me, we're not getting credits. You might get credits if you have a kid, but after they hit a certain age, things like that, you don't get the credit anymore anyway. But the credits are there for people who want to make use of them. We'll go over credits at a different time. We'll go over credits at a different time. It doesn't really matter. Now, whatever taxes you pay during the year, the FICA taxes on your W-2, the any foreign taxes that have been paid through your brokerage firm. If you invest in a foreign companies versus domestic companies, you get a foreign tax credit based on the taxes that have been paid to the foreign country. Estimated tax payments that you've made during the year. If this is April 15th, then you don't have an extension payment. But if you're the kind of people who can't pay at April 15th, you make an extension payment, you file later in the year. So when you file your final tax return, you report that extension payment on your tax return, things like that. All types of these payments and credits go into your total payments. And then at the end of the tax return, you take your tax, you take your payments, you see, yo, do I have to pay or do I get a nice little check at the from the IRS, from the government, really is what it is. And sometimes you do, sometimes you don't. So that's how taxes work. Oh, I love my brain sometimes. But this was a very high level overview on taxes. This is high level. This is very high level overview on taxes, on how taxes work, on where you could put your energy and time, things like that. I'm still saying, at the end of all this time, I'm saying your time is better served finding ways to make more money, finding ways to save on expenses and not spend as much money, and increase your wealth that way. Then when you've increased your wealth and you have money to use, then as you're using your money to make more money, then we talk about tax planning. What kind of non-wage income do I have? Because interest has its own tax. Dividends can be qualified or non-qualified, and that they have their own tax. Gains are short-term and long-term. Short-term gains have their own tax. Long-term gains have their own tax. Self-employment income has its own entire calculation that you have to make. Business income, partnership, K1s, things like that. That feeds into all these other brackets. Other types of income, rent income, things like that. All that feeds in at its rates, royalties, things like that. So there's so many different little things that go into your taxable income, your adjusted gross income, how to figure out how much tax am I paying on all these things, that kind of stuff, right? And you don't have to do that right now. You really don't. Guy like me, I work a job, I get a W-2. I have disposable income, I put it into investments. I get some dividends, some capital gain distributions throughout the year. I sometimes get like capital gain Form 1099-Bs and stuff like that. And I know that, okay, cool, if it's long-term, I'm paying 20% on it. If it's short-term, I'm paying a different amount on it. This has been a very high-level overview on taxes. What I would really appreciate is if you've listened to this far, if you listened through all this, I would really appreciate if you actually commented, whether you're listening on Spotify, on YouTube, on Apple Podcasts. If you would just drop me a comment and just let me know, I understand what you're saying, or this did not make sense the way that you explained it. That would help me make sure that I can explain it to you in a very, very simple way. And next time I will come more prepared with visuals, because I think that would help you, and so that you're not like, what is he looking at? Why is he talking about these like line items and things like that? And I don't see that. Why is he talking about these percentages? And I don't see that. Things like that, right? There's ways to make this easier than it seems, but it takes a little bit of like spending time learning and things like that, right? If you can watch an hour-long video on why you should be options trading to build your wealth, I think you can watch a 30 to 40-minute video on just how how taxes work. I think you can. Because is probably going to help you more than learning how to option trade when you're never going to option trade in the first place. And I am throwing shade at myself, what I've done in the past. So that is it for this one. I will come back, in a week or two, next time we do another solo episode, and we'll talk a little bit more in depth about specifically, after the itemized deductions thing, I'll probably talk more about income. We'll talk about the different types of income, where they come from, how they're taxed, and things like that. Because I think it's beneficial to know that, like, where are you putting your money, how are you using it, things like that. We'll talk about income next time. How's that? We'll talk about income. We'll kind of go through. And I'll try to make sure it's high level and more like digestible. We'll talk about income. All right. That being said, I appreciate you listening this far. If you enjoyed even a little bit of this, please drop a like, drop a share, leave a comment, rate and review, do all the fun stuff. If you think this would help somebody understand more about taxes, send it to them. If you have any information on, like, or anything that you think, like, how I actually think you're wrong, if I said something wrong that you think I said something wrong, let me know so I can correct it, or I can correct you. If you didn't understand something, please let me know, and I'll try my best to explain it in a better way. But if that's all for me, folks. I'll talk to you guys next time. Peace.